Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively, email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, go to kosec.com.au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee, and welcome to the KOSEC Show, where we discuss all things relevant in the market this week. Macroeconomic data, currencies and commodities, top performers for the week that was, and of course, our hottest stock picks for the week to come. As always, before I go any further, please allow me to introduce you my resident experts on the market, my investment panel. To my left, they have a wonderful Caroline Wong. Back, as always, the ever stoic Gabriel Ryan, and returning from a brief hiatus, the ever mystic Mr. Louis Mossman. Welcome, ladies and gents. How are we doing this week?
Very well, very well.
Everyone's all good?
Yeah, all good.
Brilliant, brilliant, brilliant. Let's unpack a bit today. What we're going to do is we're going to start off with a bit of an understanding of what's happening macroeconomically, and we're going to launch straight into the first 100 days of President Biden over in the USA. Mr. Mossman.
Yes.
Welcome back.
Thank you very much. Thank you very much. So look, I was having a look at the markets this week. Obviously, we had a lot of US earnings come out, and that was a big focus. But there was another one, Biden's first 100 days, and he gave a pretty long speech. I think it was about an hour's long, describing about what his...
Is that a long speech? Didn't Trump used to speak?
Oh, yeah, but Trump's another kettle of fish. We can't compare him at all.
Okay.
But this, it was pretty, a lot of people broke down this speech. Obviously, the right had a lot to say, but it was a pretty fair speech, and a lot of it I quite like the sound of myself. But pretty much he has outlined what he's done in his first 100 days, but what the rest of his tenure in office is going to look like. So there was a good breakdown of just exactly what he plans to do and the spending he's announced in that first 100 days. So we've got a good chart on what he's done and what he's announced in the first 100 days. So if we pull that up there, we can see that he's announced a $1.9 trillion America Rescue Plan, a $2.3 trillion American Jobs Plan, and a $1.8 trillion American Families Plan.
So just back up there for a second, because as he spent nearly double what Clinton spent in 1993.
That's exactly what he's done. He has spent he's promised the most spending than any other president in the United States history in his first 100 days, completely smashing anyone else. So obviously that's on the back of COVID-19, but he has
W. Bush obviously just came out of a recession or a depression or something, right? He just came out of a financial crisis.
Bush was early thousands, so that was the .com,
yeah,
and maybe it was 9/11 as well. Sorry,
yeah.
But Obama was one that was pretty justified coming out of the GFC. But this is a period of time where fiscal spending has been a focus of on governments around the world. Really fast, actionable government spending. So we've seen a lot of spending there. We've got another chart as well, looking at different executive orders that have been signed in his first 100 days. So Biden has also signed the most executive orders. So been very active in a lot of the policy changes.
Because that's quite common though, isn't it? When a president first comes into office, comes into power, the first thing they do is kind of impose a few changes.
Exactly.
And he's managed to roll back quite a few of the Trump sort of changes. And they do that in the first 100 days because that's when things are most likely to get through, because they're brand new and they can, put it bluntly, get away with it.
Exactly. I remember when he was entering office, I discussed the first 100 days. It was one of the first times I was on the show.
Yeah. And,
what that means for a president and how that usually goes. And if you want to break down how the markets reacted, that's very important, because at the start of his presidency, we were balancing the risk return of all this government spending he's going to announce with potential tax hikes.
How has he done on the market? Is this your chart?
If we go, I don't have a chart for it, but we can say that the S&P 500 in 100 days has gone up 11%. Under Biden's first 100 days.
Higher or less than, more or less than Trump?
Actually, I don't have if it's beaten Trump here. Right. I'm not too sure. But nonetheless, 11% for a year. That's quite
That's
impressive.
very impressive. Yeah.
So it's gone up 100%. So the market was pretty much undisturbed by any mention of tax hikes. So the market has responded accordingly. However, if we compare that to what the US public think, unfortunately, Joe Biden hasn't gone anywhere with his approval ratings. So the market's liked him.
Hold on,
The approval ratings hasn't gone higher.
Hold on, just back that up for 1 second. The guy spent double what any other president spent in their first 100 days, and his approval ratings haven't really changed.
No, they even dipped actually slightly in his first part of his tenure.
Does that not seem strange to anyone else?
Well, I guess people are just concerned that all the spending's going to result in increased taxes.
Well, you've got a pretty clear split between right and left. People saying, as Gabe just mentioned, who don't want him to spend that money and think it's an irresponsible use of all the public's money.
Yeah, of course.
But at the same time, that spending is reaching a wide, a lot of people. So a lot of people are going to benefit from it. So I think that you'd think they might be happy.
Unless you earn above $1 million.
Yeah. So that's hopefully a smaller percentage of the population. But that's Joe Biden's first 100 days.
Oh, very, very good. Let's go straight over to Caroline and let's just have a look at GDP and consumer confidence.
So GDP figures were released this week. We can see that the U.S. economy expanded 6.4% in the first quarter of 2021. We have a chart right there, and we can see that from the chart, it's actually the second best quarterly reading since 2003, and it's significantly better than
This
previous
is what
quarter.
This is what Biden said, wasn't he? He says America's back. We're back, and I think that was the big thing. How long are they back for? But he was definitely very clear that we're back. So that's
Very optimistic.
Very optimistic.
So it's the recovery is very different from China. So China, we all know it's an infrastructure-led recovery, but over in the U.S., it's more of a consumption-led recovery, right? Because consumption occupies about 70% of the entire economy. And this is bode well because if you can look at the bottom panel of the same picture, you can see that consumption rose an annualized 10.7%, which is good because it shows that the 2 rounds of stimulus payments are actually doing good things for the economy.
Oh, that's good. Let's just cycle over a little bit more locally. Let's go take it back to Australia, because I suppose what's sort of been brewing a little bit in the background is this whole tension between us and China. Okay, with a lot of our exports. Obviously, we'll talk about iron ore in a different section here. But I want to talk to Gabe about wine. Now, I like wine. You like wine. Seems to reason that China might like wine.
I think a lot of people like wine.
I think a lot of people like wine. Talk to us about how that's going, because they've they've had a decrease in the amount of wine that's been coming in or exported.
Yeah, a pretty massive decline in exports to China in terms of the nominal value of those exports. So in the 3 months to March 31st this year, there were only $12 million worth of wine shipped to China. To compare, the same time last year, it was $325 million worth of wine. So
is it 95%, or I can't remember the percentage.
It's a very large percentage decrease. I mean, it's a huge drop.
How is that possible? Where are they getting it from?
Well, listen, Australia was the largest supplier. I think there's a chart there that we can pull up, in fact. So Australia was approximately 30% of Chinese wine imports. The other or the remainder of that does come from Europe and South America as well. So naturally, France is a very large wine-producing region, but Spain, Italy, as well as I believe it's Chile in South America as well. So they're all exporting wine to China, and those exporters are probably doing very well with the glut that we're seeing because we've been given that 200% tariff. So clearly, there's been a really sharp decline in the amount of exports in terms of the nominal value as well as in nominal value.
So probably not affecting Treasury wines very favourably. Is that correct?
I think that'd be a pretty fair assumption. I think the tariff on Penfold was about 175%.
Wow, that's incredible.
So it's a pretty obviously.
And why has this tariff come out? Any particular reason, or just because ongoing tensions?
He said, she said. So the issue was the government probed the origins of coronavirus. So they said.
That's right. So it started with Morrison saying, I would encourage a investigation.
With the whole inquiry, the situation to Wuhan, that escalated.
I've forgotten about that.
It's a very dynamic environment.
Every week we see a new development in Australia-China tensions. And to be honest, I think it's something that might be a little bit under-attended to when you think about it. They're our biggest market for all our exports. And at the end of the day, a very important market to us. But every week there's a new development. I think the most recent one is an initiative in Darwin. Gabe, you discussed this earlier in the week, that we've cancelled an agreement with China, originally signed a few governments back. Is that right?
It wasn't cancelled. So There was a memorandum of understanding with the Victorian government for the whole Chinese Belt and Road Initiative.
Yes.
Again, that's sort of viewed as a vector by which the Chinese does, push their expansionist policies, so-called. But what's being reviewed now off the back of that is the leasing of the port of Darwin and the port of Newcastle to Chinese companies, China, for a period of 99 years.
Newcastle just up.
Yeah.
Okay, yep.
So those two ports have been leased to China on a 99-year lease, I'm pretty sure. I think that was in 2016 that deal was done. So that's something which is being reviewed. We've just had a Chinese, I suppose you could say, emissary here in Canberra also discuss the potential withdrawal of Chinese tourism off the back of, I suppose you could call it racist sentiment, so-called, that he's also identified. And that's a massive market, right?
That's the other thing is tourism. Not tourism.
It's a huge market.
Tourism, but also students.
Massive.
Obviously, huge amounts of students coming across.
So clearly, if that market does disappear and go somewhere else, we're really going to be in a bit of a pickle.
Yeah, it's a little bit of a pickle. Any comments on that one, Caroline?
I just hope that international travel resumes soon, because I think a huge part of the Australian economy relies on tourism.
Yeah, absolutely.
Yeah, tourism and students are a big one, and our two biggest importer of tourism and university students is from
absolutely.
China. So, I mean, the sentiment over there, if it builds very negative, Australia's doing this, and this to China, and I mean, the CCP could push that against us and use it against us on their own population, and they're going to stop coming here.
Well, think of it like this. The Chinese make up about $12.5 billion worth of tourism in terms of the tourist industry here in Australia. The next biggest one is the US at like 3.5.
Yeah.
So it's a pretty big market that we're missing out on.
Yeah, well, we want that comeback for sure.
I'd like to transition back into this a little bit later when we talk a little bit about iron ore in our commodities section. But give us a very, very quick 30-second overview of what's happening with COVID. With our jabs, whereabouts are we situated at the moment?
Well, where I live out in Sydney Olympic Park, they're doing a mass vaccination clinic right next to where I live. And I believe that's opening next week. So people are going to start getting that jab very soon. I think where the rollout's slowly gathering pace, though we might be lagging in Australia, and the government's received a little bit of criticism.
Okay, it's all well and good. But in terms of that, how's the markets been this week?
I think a hand gesture of that might bode well, up and down a little bit.
Did we actually finish up for the week? I know we were down today nearly 1%, but I know yesterday we were up 0.5%. So we actually finished about above 7,000. Is that right?
Yes. 0.6 we ended down for the week, and I think it was 0.89 we ended
not
today.
the best.
Yeah, it was a bit of a mixed week. I mean, you could just say we ended flat. A lot of mixed factors balancing each other out, really.
There's a very, very common technical indicator called consolidation. When you go into a consolidation pattern, well, after a big steep run up, we go into a consolidation pattern to the side. If you look at it on the chart, it'd be hard to say that the XKO
that's exactly
is
what
not
we're
doing
in.
the same.
Yep.
Are we going to break to the north or are we going to break to the south? Thoughts?
Well, provided all else is equal, consolidation patterns are always positive, especially above that average of those two Donchian lines. So something we could see doing pretty well potentially moving forward.
Yeah, absolutely. Brilliant. Well, you heard it here first. So, ladies and gentlemen, we're going to take a short break. Now, if you have any questions for our panel, please feel free to take a video and email it through to info@kosec.com.au. As always, anyone that does will receive a copy of our book, Stock Market Success, retailing in Dymocks for $39.95, or our magazine, selling in news agencies Australia-wide for $19.95. We'll be back shortly with your currency and commodity overview.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Do you follow currencies? Want to know how the Aussie dollar is travelling? Do you love commodities? Do you see gold prices rising? Do you see more demand for oil? Do you see the world economy growing? Get the latest in-depth analysis and discussion on commodities every week from real traders. Get real insights only on the KOSEC Show.
Welcome back. Let's talk currencies and commodities, all things that shine, sparkle and fold and make the world go round. Mr. Mossman, have a chat to us about how gold has been doing throughout the past week or so.
Yes, of course. Well, I'll probably marry this in with copper as well. That's probably been the biggest commodity story of the week, copper. But gold recently, I'm sure we discussed this 2 podcasts ago, it made that significant double bottom if you look at it about on a year-to-date time frame. Since then, it's probably consolidated above that over this week. Hasn't really done a lot. If we get that chart up, we can see it's kind of just...
Sort of broken out of its downward trend, hasn't it?
Exactly. It has broken out, not officially, but it does seem to be entering some sort of consolidation. Currently hovering around that 17, say 40 to 70 or 80 mark. And it's really struggling to break out north or south. At the moment, it's probably waiting for a shorter term catalyst to, push it in
And
either
what's that
direction.
shorter term catalyst going to be, in your opinion?
In my opinion, look, it'll have to be monetary policy. It'll have to be something come out with the Fed. There was a
Or
short...
tensions, maybe even tensions.
Or political
spike.
tensions as well. We did have that short-term demand spike where the Chinese government and a lot of Chinese banks, Russian banks as well, were buying a bit of gold. It propped up the price for a little while. It's waiting for little catalysts like that. Talked 2 weeks ago about my longer-term inflation expectations and how probably that'll bode well for gold as well. I'll keep that in check. But again, that's probably medium or longer term.
I think one of the interesting things about it is the case for gold is very, very strong right now. And I think we'd all agree that the case for gold is, we've got the inflationary pressures, okay, longer term store of value, a bit of uncertainty surrounding the world. Is a political tension just a catalyst that we need to just send us on a huge big spike towards the north? And what would that political tension catalyst be?
The biggest tensions that really the world listens to at the moment would have to be US-China and US-Russia.
Could that spark back up again, do you think? Any likelihood? Or do you think Biden's too sort of soft for that?
No. Biden, I wouldn't call him soft at all. He's did something I didn't really expect at all. He made clear in that speech I discussed in the previous segment that he will be quite firm on China.
Okay.
I can't quote him exactly and I won't do so, but he said something along the lines of there's no reason why we can't build windmills in Pittsburgh instead of Beijing. So he's like, we're going to bring jobs back to America, much like Trump did.
Very good.
So I think that they're the possible tensions, but I think inflationary expectations and a weakening US dollar with the more likely catalysts.
Okay. So talk copper. Copper are well known to be potentially a bit of a bellwether to the economy.
Yes, of course.
Okay, that's sort of a wide conjecture. And now I've traded above 10,000 for the first time since 2011.
Yep.
That's a big number.
Yes,
okay, and so copper and gold seem to both be doing quite well. Is it Goldman Sachs that increased their target? Is that right?
Yeah, Goldman Sachs have quite a bullish price target, around 11,000 per ton, and I think it's 12,000 in 2023. So they think that the current demand for copper and as well, there's some supply concerns as well around the world, can continually prop that up the price, but mainly driven by demand for electric vehicles and other renewable energy sources that demand a lot of copper.
And let's not forget that majority of copper miners, and I think I've said this before on the podcast, the majority of copper miners are quite profitable at around the 6,000 US metric ton. If you're doubling that, then you're going to have some quite profitable firms out there.
Yes.
And talk for gold. Let's just jump straight over to Mr. Ryan. Have a chat to us about oil. Obviously, it's pretty hard to talk about gold without talking about oil. They're one of the most traded things, or they're both the most traded and invested things. So talk to us about how that's all going.
Well, I think we had a very good week for oil this week, if we can pull up the chart, in fact. We obviously had those concerns in India.
Yes.
Which is a very large consumer of oil in terms of the global scale, have those crazy COVID situation over there, 300,000 cases per day.
Which is a record, yeah?
A record by all known factors.
They set record in consecutive days this week, records.
One thing that probably was a bit alarmist, though, was the burning of bodies. Now, in India, they do cremate bodies there. That's the funeral process. That's what they do over there. But nevertheless, it's an incredibly dire situation, and Biden's, of course, given them those AstraZeneca vaccines pending approval to try and help circumvent those situations. But nevertheless, oil's had a really good week this week, and that's probably driven by a lot of the positivity with the economic growth over in the US.
Right, yes.
Right, so obviously Caroline did touch on that. I think it was 6.5% growth in GDP for the last quarter, which is pretty substantial, I think it's fair to say. Naturally, that does give some risk on sentiment globally, as oil is a risk-on asset. The assumption is that could potentially do quite well moving forward as well.
So you think Bush? What if they've got some price targets out?
I think Goldman Sachs actually has it reaching 80. I think in the next quarter.
Yeah. So a lot of people. I mean, I remember back talking about the $100.
Yes.
Any chance we could get back to that?
Well, look, we are seeing a shift away from, I suppose you could say, crude in general. But I mean, at least for the short term, we could easily see these prices reaching 3 digits by this year, maybe next.
Okay, so let's talk about. Let's just segue into our next topic. There, oil's going up, but one thing that was not going up today was beach energy.
Yes.
Okay, now that 24% drop, decimated, already low in its range. It was already low, 24% drop. What do we make of that, gents, lady?
I mean, imagine a quarter of your company's share price wiped off in one day. It's pretty difficult to stomach, especially if you're a shareholder. We're not involved in beach energy really at the moment. But I mean, it's just going with the trend of what we're seeing around the world. We're increasingly shifting away from the use of oil. And another thing, I'll go back to Biden's speech for a fourth or fifth time now, but he made that very clear in his own policy statements that he will be pushing, like no president has done before and no major world leader, the importance of electric vehicles. And he said electric vehicles and electrification and renewable sources of energy.
They're talking about how charging stations is going to be the big thing that they're lacking.
Exactly.
It's not going to be so much the electric vehicles, which are easy through mass production. They say it's going to be the charging stations. There's always that funny meme of Elon Musk sitting next to a electric charging station that's powered by a petrol engine or a diesel engine. He's just like shaking his head.
Yeah, well, you got to get one stage of the process before you get both of them. But I think that is a big problem.
It's all in our infancy at the moment, I suppose. That's what we need to understand.
I actually think Tesla's recently announced the potential for providing those charging stations for all cars.
Yes, right.
Not just Tesla cars as well. So that's obviously going to facilitate that transition.
Yeah, well, when Musk was really pushing, the rollout of his electric vehicles and Tesla, he funded a lot of those electric charging stations. And now at the moment, there's another Nixon, does that sound right? They've announced, I think it was $100 million of spending of, releasing charging stations across America, especially in rural America, for all electric vehicles, because they recognize their product is virtually useless if there's no charging stations for their cars. It's not something that's yet government funded. And it's not something that Biden has really made any policy statements about. So it's really up to the onus of the makers themselves.
Because I speak to a lot of people about buying an electric car here in Australia, and a lot of them come to me and they say, oh, look, there's nowhere to charge it. But if you actually look at the map, they've actually got it all mapped out that you can actually go all the way to Perth just on charging stations.
It's very transparent,
Yeah, it's very transparent. And they said, oh, what happens if I just run out of electricity halfway through? And apparently, the car will actually guide you and actually divert you and start driving you to the next station, depending on how far and how much electricity you've got.
Sounds very Musk-esque.
Yeah, that's so
cool.
Musk-esque. And we could go on forever about it, but I think if you've ever got a moment, and for our listeners, Google the electric bike. Everyone's seen the Deliveroo drivers going around on their electric bikes. Well, he's brought out his own electric bike, which is looking pretty impressive. Thinking about something else that's been quite impressive, and that has been iron ore. So that's been moving in a positive direction. We'll talk about, and we'll go over to Caroline, who's another thing that's very impressive, over to talk to us about iron ore.
Yes, it's a very, very strong run. Remains very high on its range. If we look at the chart, this one is from S&P Global Platts. This is one of my favorite charts. You can see that over the past 12 months, the prices of iron ore have doubled. So as a point of reference, on 27th April 2020, so that's exactly 1 year from where we are now, iron ore was only trading at $83. So it's more than two-folds. Yes, the reason more than two-folds. So since last year, demand was driven by China. We all know that. But the supply side of the equation does not look too positive as of now. So seasonal production, we have experienced reduction. We have seen a reduction in seasonal production across Australia and Brazil. So over in Brazil valleys, quarter-on-quarter production actually fell 20%.
Right.
This week, we have also seen Rio and BHP coming out with their quarterly production updates. We have also seen an 11% and 5% reduction in production. So not too good. But one thing that I think we have to remember is that prices remain so elevated this week is partly because of China. They are entering a 5-day holiday.
Okay.
So they might be.
So we're getting it all done before you.
Yeah.
Okay.
So we're just looking very closely to the price action when they come out from their holidays.
Very good. I'm going to jump around. Let's go to the last thing because I really want to discuss one thing, and that is obviously cryptocurrency. Let's have a very, very quick chat about that. Gabe, we're seeing Bitcoin moving into a slightly negative direction.
Yes.
Okay, off its highs of 60,000. However, we have had Ethereum, which is the next biggest coin, and it's currently trading at it's cracked 2,800 a coin. What's your thoughts? What are we taking on that sort of sector? Well, not sector, I suppose, altcoin cycle, as they say, or what's the story there?
Yeah, so it depends on what kind of narrative you really want to take in this particular situation. So obviously, Ethereum's a sort of a smart contract platform, and it's all blockchain technology and very convoluted. But it's something which has been heavily discussed now. If you're on Twitter, you can hashtag the flippening, which is this event which has been, I suppose you could say, it's been a long time in the making. Where eventually the anticipation is that Ethereum will flip the market capitalization of Bitcoin. And that's on the basis of a certain number of nodes, transaction volume, things of that nature. So obviously, Bitcoin hit a high of around 65,000. a lot of long liquidations kicked in there. It took a pretty sharp pullback and is now hovering. I think it's around the $54,000 mark. And a lot of capital outflows are probably going to these altcoins. And if you look at the overall dominance of Bitcoin, I've been watching it very slowly over time. It's been as high as 70, 80%.
Yes.
It's now at about 45%.
So what that means for our viewers is 70 or 80% of the entire crypto market, of all cryptos, were made up by Bitcoin.
At one stage.
At one stage, 70% of all the market value of all the cryptocurrencies was made up by Bitcoin. Yeah. Now it's dropped back. So
it's less than half now. So a lot of money is flowing into these alternative cryptos as well.
And so that started to pull it back up. Yeah. Very, very interesting. That is certainly a space to watch. But that is commodities and currencies and the events that have shaped them. Now, are you a bull or a bear? Let us know. Our phone lines are now open. In the meantime, we're going to take a quick break. And when we get back, we're going to look at the best and worst performers on the Australian market this week.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working overtime, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
On to our next section now and have a look at what the best and worst performers on the market this week were. Now, were there tears shed this week? Who lost money and who has Christmas come early for? Caroline, we're going to jump straight over to yourself with our chart. What did well this week?
Sure, we pull out the chart. We can see that performance this week is relatively balanced. So we have six sectors doing well, 5 doing not too well. Top performer this week, energy, 1.33%. Oh, also bear in mind, this is a performance from Monday to Thursday only.
Okay.
Energy was a top performer. Karoon Energy was one of the key outperformers. It was up slightly more than 10% this week, also on the back of a very positive trading report. It outlined its first full quarter of production. So that's good for the company. Worst performer, consumer staples, down 2.6%. A lot of it was done by Woolworths Group, ticker code WOW.
Because that reported well
Yes.
and went down and Coles went up. Is that right?
So close, it was down close to 6% this week.
And
But-
Coles was up.
Yeah, but if we look closely into the report, so what happened was that for the month of April, Coles supermarket sales was actually up 4%, but in retrospect, Woolworths sales was actually flat.
Okay.
So that was what pulled it down.
Okay. Any other comments on the week?
I realized that there's a very heavy correlation between IT and healthcare. So when
Okay.
IT does well, healthcare does well automatically. And when it is a bad day, both just flip towards the other side of the coin.
Very good. Ladies and gentlemen, we have had a video question that has been emailed in and we're going to go to that right now.
Hi guys, as you know, ESG is becoming an increasingly prominent theme. What are your thoughts on this and which companies do you think are leading in this space?
There we go. So, interesting question, always asking about ESG. So let's start things off. What is ESG and why is it investing and why is it so topical at the moment? Mr. Mossman.
I think, Caroline, did you want to kick that off? I thought you
Sure.
had a little speech.
ESG stands for environmental, social, and governance. So
Okay.
a lot of attention is being placed on ESG right now. I think we had the climate change summit by Biden in Australia. We also dedicated about 530 million to green initiatives. So we are actually lagging behind other countries when it comes to net carbon zero emissions.
Yes.
But a lot of companies are doing a lot of positive initiatives in this regard. For instance, Fortescue Metals.
Yes.
We know that they actually moved towards their net carbon zero emissions by 10 years. So they initially planned to go net zero by 2040. Recently, Twiggy Forest has actually pushed forward the deadline to 2030. Regards to iron ore, the company wants to use hydrogen instead in the manufacture of iron ore. So that's more environmentally friendly.
Yeah, well, they're a market leader in doing that kind of stuff, staying ahead of the market. That's why they've done so well recently. And I think as the questions thinks, what do we think of ESG and its impact on the market and businesses?
It's a bit hard to not think positively of it. I mean, it's certainly.
Yes.
I mean, you're a bit of a heartless person if you're like, no, I don't like environmental stuff.
Well,
I
Beach
mean,
Energy and just about every ASX 300
Yeah.
listed company has their own sustainability report.
Yeah, of course.
It's a part of the infrastructure of a modern economy now. You know, having some sort of initiatives that's put you forward as a environmentally and socially responsible company.
So long term, quite a bit of potential there. Certainly in the long term, you know, we go out. This could be a major thing. What's a stock that we could advise our video question to look at?
Well, I think we've been talking about AEF for quite a while now. I think
Australian Ethical
the
Investments.
the last 4 or 5 weeks, we've seen an extreme run up in its share price, and we've seen, it's a business that's done well over the last 3 or 4 years in particular. again, that focus on ESG has only increased as time goes on.
Yes.
And I don't think anyone could really say that it's not going to continue to. That importance of ESG to continue. That's their focus, ESG-related investments and ethical investments, as it is in the name. And I think as an investor, and especially a younger investor, ESG is definitely something to focus on.
Very good. So I hope that answered your question. Keep those questions coming, team. For now, back by popular demand, we're going to go straight to our next section now. Let's go to the street and see what everyone's saying on there. This is Street Walks, Street Talks.
Welcome to Street Walks, Street Talks. I'm in our beautiful city of Sydney, asking people about the market. Feel more comfortable investing into stocks or cryptocurrencies?
I would say a diversified portfolio is always better.
Okay.
Right now, I think crypto is in a bit of a volatile state, so stocks, diversified, that kind of thing.
Okay.
Jeff Bezos is going to take over. Well, considering that he's the richest man in the world,
I think Elon Musk might have.
Oh yes, you're right. He just took over, but I wouldn't say that would be very surprising considering.
And do you think that, considering how well Amazon's done, do you think that will spill over to our market, say with something like Harvey Norman, Kogan, online?
Well, they've already created a distribution center down in Melbourne, right, for the Amazon stores and the automated marketing and manufacturing one. So we're just putting in Amazon telephony into the systems as well. So
and what sector are you in? What business are you in?
Oh, we're working with wealth management. So we do actually, but I work in IT. So when we say stock tick, so I deal in computers, but not.
You've never written an algorithm?
Well, we have, yes.
All right.
But it's more to do with the payment systems than the actual one. So,
Great.
But yes, I think Amazon is diversifying very, very much.
Great.
So it wouldn't surprise me if they take over.
Okay. What milk do you put in your cereal? Is it A2 milk?
A2, I do. A2 or 2%, yeah.
Okay. What sort of milk do you put on your cereal? Is it perhaps A2 milk?
It's not.
It's not?
No.
Do you drink milk?
I do. I drink cow's milk.
Okay, Coles milk. All right, Amazon's done really, really well just recently. Do you think they're going to take the world over?
No.
If you had $1 million today, what sector or business would you put that $1 million into?
Internet security, I think.
Yeah?
Yeah.
What makes you so concerned about the internet?
I think it concerns everybody, doesn't it? They just have access to absolutely everything. All our personal data, all our personal details, all our finances, everything's online, everything's just a number, so I prefer to be more protected than not, I guess. So.
Okay. And do you have a certain provider that you trust more than anyone else?
Not really. I mean, it's just whoever.
Okay.
Yeah.
Are you an advocate for VPNs?
I am. Yeah.
Believe anything the media says.
Yeah. All right. So you take the line that now would not be the best time to invest in Amazon?
They've just gone gangbusters, haven't they?
They have.
And they've just gone through the roof. They're like tripled their value. I saw on the news this morning.
Okay, so you do know a little bit about the stock market.
I see the news.
That's good.
I keep watching for the Australian dollar to go back up to 100 cents. That's all.
Okay. And what excites you about the Australian dollar going back up?
It'll be worth more when I get to go overseas again.
Ah, okay. So you think that we're going to recover from COVID and have a full open border policy very soon?
Not very soon, but eventually.
Well, I haven't got any tips except to be careful with your savings and save for the whole of your working life.
Okay.
For a working person. I was told when I first started work in 1960, your wage, third in the bank, a third to spend, and a third to live.
Okay, all right.
When I used the expression into the bank, I meant into a safe deposit, be it a bank or be it a buying shares or whatever it may be.
Okay.
Yeah.
Gotcha. All right, great. And if you had $1 million today, just lying around, what sort of sector or business or where would you put that $1 million to grow?
I'd invest it at the moment because the housing market is too expensive. So I don't think that's a good investment at this point in time. So I'd go to my financial advisor and ask what he suggests, and probably be an investment for a period until the housing market falls down. Then I'd look to having another property.
Right. So housing market too hot, go into something else for a little while, wait for it to cool off, and then maybe come back.
That would be my advice, and that's what I would do. Yes.
Invest in something. I don't know.
Yeah.
I don't know what, but I think investing.
So there you have it. Just invest, the last guy says. Just invest. That was Street Walk, Street Talk. Let's go to the panel and see what their analysis is. Let's start off with quite a bit to unpack there. Obviously, quite a bit of work around A2 milk. The A2 milk, branded milk, a lot of people are saying, you know, they like it more. I know you're quite a big fan, Mr. Mossman. You think there's quite a bit of a difference in there? What do you think?
Break down the taste difference, I couldn't be too sure. And breaking down the science behind A2 milk, again, I couldn't be too sure. But it's definitely a company that has been a market darling for 3, 4, 5, 6 years and it's done extremely well. And I think the reason that it's been talked about a lot, we're definitely covering it, A2 milk a lot, and it's people in the public are keeping their eye on it, is because that share price has been so heavily hit in the last 6 months.
63% drop-off. So it's gone from $20 down to below $8. That means if you buy it now and it gets back to its all-time high, which is what it was trading at in September last year, that's around 173% return on investment. I mean, and this is a top 50 company on the exchange. Top 50? Top 100?
Could be top 100 now, but I think it's still top 50.
I think it's still top 50.
Yeah, absolutely. So brilliant. A lot of people talking about that one there. Let's cycle over to Amazon because that went a lot to say about Amazon from the second gentleman.
Exactly.
He was talking quite a bit, quite animatedly about it. Is Jeff Bezos or is Elon Musk the richest man in the world?
To be honest, the volatility of Mr. Musk's share price might change that daily.
Okay.
But I think, they're competing for top spot nonetheless at the moment. And I think people sometimes perceive the amount of wealth that they have in those companies that they're taking over the world, and they've got all this money and this power. And I think one thing that annoys me sometimes is when people think he's got $100 billion. He doesn't really have $100 billion. He owns a company with a value that might total that. If he wanted to sell a tiny fraction of that, he wouldn't be able to. There wouldn't be a market to sell it to.
Yeah, right.
So he doesn't really have $100 billion.
It's not like he can just go and say, I'd like to buy $100 billion.
Yeah, I'd like to sell my $100 billion worth of Amazon stock. So
because what would happen if he did do that? I mean, obviously,
the company share price would probably implode. There'd be so much negative volume on the market. There'd be no buyers for his sell orders at all. So he'd have to take a price that was ridiculously low. So, Amazon, I think this week they reported their first quarter figures of the year, and they tripled their sales. So from the previous corresponding period, they saw their share price jump 3 or 5% in aftermarket trading following that announcement. And I think year to date, we know that tech sector's probably been a bit mixed, but year to date, they're still up 9%, which again, a full year return, people would be pretty happy with 9% on a portfolio.
But it's not the only one only tech stock that's reported quite well. What else has reported well? Anyone over in the US?
I'm pretty sure most of them have actually reported above expectations, about 80%. So it's not necessarily a question of reporting well in nominal terms, it's how that report is received by the market. That's the real issue here. So obviously Amazon did very well. Other companies reported very well, but there's been a bit of a lackluster response to those results, really.
So we really want to see I suppose it's all about their expectations.
Exactly.
Let's move on to our next point now. I think the gentleman said, looking at my notes now, the gentleman said that if you had $1 million, which would be great, I love playing that game. That's a brilliant game to play. If I had $1 million, I would not invest it into a house at the moment. I wouldn't buy a house. I would invest it into shares, which he said investments. That was an investment. I couldn't quite understood that, but he said he'd go to his financial advisor and he would then invest probably into shares. Then he would sell out and then maybe buy a house when it crashes. Any merit behind that?
I mean, I suppose there's definitely merit in the first part of the statement when he said property is very hot right now and it's probably not the right time to enter into the property market. So you can completely understand where he's coming from there. In the blue chip areas of Sydney, and I suppose the whole of Sydney, the property market is very heated. And I suppose in the stock market, you could probably, have that more liquid investment that, is, profitable in the short, medium, and long term.
I mean, it's this classic debate back and forth, and we literally should start an entire podcast just to debate this back and forth. But in a nutshell, they say 6 in 10 suburbs, it's now cheaper to buy a house than it is to rent a house. That being said, that is now. That is right now. Now, if you can't really afford to buy a house and you don't have the wage growth, do you really want to be taking a gamble into buying a house now if you're not anticipating, if your situations aren't going to change and if interest rates are going to get lifted back up again? That's the big risk that you take. Obviously, housing is very, very overheated. As we said, some stocks, not all stocks, but a lot of stocks are still very, very low in our range. Classic example is those Kogan stories, those A2 Milk stories, high quality businesses that are still very, very low potential growth there, would you say?
100%.
I think we'd all have to agree. Just blanket agree, yeah.
Very good. And obviously, the last gentleman said invest. He said invest in anything. With a little bit of crypto, I think a little bit of cryptocurrency kind of came in there at the start. The old classic debate, is it shares or is it crypto? And a little bit of A2 Milk. So that's the best and worst on the ASX this week, and that was Street Walk Street Talks. Now, do you have a stock that you've been watching for a while? Is it time to buy, sell, or maybe even average in? Why not send us a message and we can ask our panel? In the meantime, let's take a short break and we'll be back with our final section of the show.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people, not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Back, the moment we've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for. We know what oil, gold, and the dollar's done this week. We know what the top performers for the week were. Now, let's take a look at what our panel's looking at for the week to come, and we are going to start off with Mr. Mossman. What are you looking at this week, and why do you like it at the moment?
Of course. Well, I'll follow on from the narrative that I was discussing previously in the currencies and commodities section on gold and copper. We'll be looking at one of the largest gold and copper producers in Australia, and that is, of course, Newcrest Mining. So that's a company in the gold space that's got a dual exposure to that copper that's done extremely well, obviously boosting that company's margins recently. So that's more the macro perspective, and I think we could all agree that both of those metals and precious metals are going to do very well moving forward. We look at the company itself. They recently released in the first quarter update this week, announcing that they have significantly cut costs in general, but also reduced the average cost of production for their gold. So that's a positive in itself. As well, they're a very financially strong company as well. Now, if we move to broker calls and see what the major institutions like, and we cover quite a number of these large institutions, and we can clearly see that all of them have quite a positive view on the space in general. A lot of these producers, they do see upside. In particular, though, Newcrest, we've got UBS have a buy rating at 23% upside. We've got Ord Minnett with a 36% upside. Credit Suisse, Citi, Macquarie, Morgans all have 10, 13, 10, and 15% upside.
So
bullish. A lot of strength backing by those institutions. Then finally, we look at it on a technical chart. Yes, it has broken out of a downtrend, and it might have found a little bit of resistance at those 200-day moving averages, but we're looking like it's going to enter that consolidation period below. So once it breaks that, and once it continues to retest those moving averages, in the short, medium, and long term, I think it's quite a strong investment at this point. So my pick is Newcrest Mining, and that's what I'm bringing.
Very good. Mr. Ryan, what are you looking at this week? Why do you like it for the week to come?
So I'm looking at a business called Coles, and I'm pretty sure...
Haven't heard of that one.
Or maybe you haven't. But I'm pretty sure everyone will be familiar with Coles. I shop myself at Coles quite a lot.
Yes.
And I'm pretty sure that a lot of other people probably do as well. Now, obviously, Coles released their, I suppose it was an update, their earnings, the results. And, people could say a little bit more of a muted sort of situation there, but the reaction by the market was actually very positive. So on the day, open low, and now we've seen a very sharp rise. I think Coles closed out the week about just under 4% up.
Yeah, it was good.
Off the back of that.
It was a good day.
Keep in mind, this is a top 20 company as well on the index. So I think one of the major concerns which people could flag with Coles was obviously the large surge in sales because of COVID. Naturally, we have seen the share underperform a little bit, especially with a very sharp decline earlier on, a couple months back. But I think that's already factoring in some of those concerns that we've seen. And I think moving forward, based on a very consistent growth base, we could see this potentially doing quite well as well, especially with this Woolworths underperformance that we've seen as well. And on top of that, valuations are quite encouraging. In fact, all above the current trading price. So we could see some further positivity for Coles moving forward from here on out, potentially.
Very good. Caroline, saving the best for last. What are you looking at?
Australian Ethical Investments, the one that Louis pointed out earlier. New Opportunity to the Table is a fund manager that oversees a portfolio of socially ethical, responsible investments. But what makes it special about the company is that all investment it undertakes, it has to meet the requirements outlined in its ethical charter.
Okay.
Macroeconomically speaking, a lot of attention has been placed onto ESG, but one common misconception is that when you move towards ESG, it will not yield financial returns. If we look at the chart that Bloomberg has, so this was just published 2 days ago, you can see that its performance actually outperformed Magellan Financial Group, that is highlighted in the blue line, and Platinum Asset Management. So there are merits to it. Financially speaking, very, very solid, stable company. Sales, cash flow, earnings up for 3 consecutive years, even during the pandemic. And if you look at the charts, technically speaking, just broken out of this consolidation pattern, stochastic positive, MACD positive, so there will be positive momentum in the short run.
So, Australian Ethical Investments, Coles Group and Newcrest Mining. Ladies and gentlemen, thank you very much for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends and colleagues a safe and happy weekend. And we look forward to seeing you next week. My name is Will Brownlee and this has been the KOSEC Show.